what does this mean for the average normal people? So if I can talk more about that. So what should we do? What is the solution? For me, if I understand it, what should I do? What is the right decision?
Well, that is why we have macro trends, of course. That is
okay.
That is the questions I'm answering every 2 weeks. We have a lot of people coming in now, more and more people being aware we have to do something. You know, it's the money on the bank is giving me, if I'm lucky, 0.05%, and inflation is at 1%. So if I have 100 euros in the bank, after 1 year, the purchasing power is 99 euros after having taken no risk at all. So what do? You go to the stock market, you know, it has corrected 35%. Maybe that's a good idea. And a lot of people are doing it. Like in Belgium, for instance, the brokers cannot keep up with the new accounts coming in.
The same in Hungary and States,
Yeah. So we are very late in this cycle to start with stocks. You know, you want to start with stocks when a big crash has come. Like look at Sir John Templeton.
Panic on the streets.
Yeah. In 32, I think he went into the New York Stock Exchange and he said, "Give me a share of or 100 shares of every company you have." And that was a genius stroke because, you know, maybe 80% of those companies will fail, but if you buy them so low, it doesn't matter. So that's the moment to buy stocks, not now, because, you know, most companies are so overvalued. They have lent money because it's cheap, and with that money, they have bought in their own stocks.
Yes.
So there are less stocks for the same amount of people, so the stock rises. But this has nothing to do with gains, with the
fundamentals.
The fundamentals are gone. Like if you invest now in the stock market, we do it with macro trends, but very selected projects that I have been following for the last 5 years in startups with a good financing and a good future. But this requires an enormous lot of due diligence. But for the normal guy, let's say a normal wage, 35 years old, starting a family, you cannot even save a lot of money. So, you know, what do? My answer is that the basis of your investments should be precious metals. Be your own bank. If you buy a Napoleon coin, which is about 350 euros at present, if you buy one each month, well, then by the end of the year, you are really saving. You really feel that you have something in your hand because the things on the bank, they are numbers. And Lagarde invents numbers all along. So when the crash comes, and it will eventually come, this is not an if, it's just a when, you don't know when.
Yes.
Then the only thing that will have value is things that do not have counterparty risk.
Mm-hmm.
I think that is the most important thing. Like contracts will be, you know, liable to whatever the contracting party on the other side can pay you. And if they are in trouble, even if they want to pay you, they will not be able to. And so gold is like, it's like getting out of the market and waiting. And you should not put all your money in gold, of course, but let's say 20%. The macro trends subscribers put in 40%. Which is enormous. That's no portfolio manager would ever put 40% in one position.
I agree.
But I am convinced that, and it has been very profitable for us because the last decade, the central banks have practically subsidized our strategy. Gold has risen in euro in the last 15 years, 11.7% per year on average. So tell me where you get 11.7%. I don't have to do anything. I just buy a gold coin and I wait. And it is not true, for instance, that is something I want to add, that gold has risen. It's the euro that has dropped.
Yeah, that's what I wanted to tell, that you are not more rich, but you preserve your purchasing power. And that's what I mean. You preserve, in numbers, nominal numbers, you are more rich, but that doesn't mean that you can buy more bread.
Yeah, well, it's yes. I know what you're trying to say. Yes, I think that is correct. But the whole point is that most people are pursuing profits proactively Well, the whole deal is to limit your risk. If you can limit your risk and everybody else around you loses, then you're richer also. It's a relative
Yes,
game.
yes, I understand. But so even if the, for example, gold price would fall tomorrow 20%, but the S&P 500 would fall 50%, then yes, you have a smaller number what you see, but you can buy more shares of S&P 500. So
Yep.
then your purchasing power increased.